Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Tim McCourt, Global Head of Equity Index and Alternative Investment Products at CME Group, to discuss volatility trends in VOLQ, the volatility index that directly tracks the Nasdaq 100. Tim, it's always great to see you. Welcome back to Trade Talks.
Yeah, great to be here, Jill. Thanks again for having me. Always good to
All right,
catch
it always is. And Tim, let's talk about VOLQ performance since the start of 2020.
I mean, VOLQ, which is the index that tracks the at-the-money implied volatility of the Nasdaq 100, which is certainly a unique perspective and measurement of vol because it's focused on at-the-money, right, with the 32 options that it precisely calculates the at-the-money implied volatility with 30 days to go. 2020 has certainly been a volatile year, and I think VOLQ has become a very important measure in the marketplace given the focus and the popularity of the Nasdaq 100 as an index, but also a lot of the story stocks that make up, the upper echelon of the Nasdaq in terms of weight. So when we go back to March, we saw the VOLQ index top out at almost 80 in terms of its measurement. It was between, a little over 78. And we've seen it come in since then, but it's also come in even the last few weeks. With last week, it started off around 34, and now it's around 31. So I think that's going to become a more and more important measure, and certainly something that I'm keeping an eye on, and I think market participants are keeping an eye on as we head into Q4 in 2021. We only expect that number to change, but tough to tell necessarily which direction it's going to go.
And can you talk to us about the recent expiration on October 21st?
Yeah, so when we introduced the futures on October 5th, building markets is always a challenge, and there's lots of interesting things that market participants need to focus on. And something for volatility products is a clean and seamless expiration, and we went through that last Wednesday. We had a few contracts on the futures contract be carried into expiration, and the calculation happened without incident, as planned, based on the NDX options, the cash index options. It was published a few minutes after the 5-minute observation window because it happens right after the US market opens. And that was great to see, and it gives market participants a lot of confidence in the process from an operational perspective and knowing how to handle that index auction, or that replication, I should say, over at NDX on the cash index side. So it's been great to see.
So in your view, why is it important for there to be futures on top of the VOLQ index?
So futures are always a great kind of personification of an index, is the way I like to describe it. It gives the marketplace and participants the ability to trade the numerical value that the index tracks. It makes it very simple in terms of a futures contract being linear. If the price is going up of the futures contract, that's the expectation of volatility going up. In the example of VOLQ here. And the one thing that I like specifically of where we are right now of having 3 monthly contracts on the VOLQ futures is it gives you that term structure. It gives you some of that information about the forward expectations of volatility, which is not only interesting from a trading or a risk management perspective, but has very useful informative powers in terms of giving you signals about what the market is expecting or where the market is clearing in terms of the directionality that volatility might be heading in the coming months.
And Tim, to wrap up here, what's the response been so far for market participants?
It's been great. We had a lot of interest in the contract. We're still working on developing the screen liquidity, which is, improving every day. We're really focusing on our partners at Nasdaq on the index education, making sure people are familiar with how the contract works, making sure they understand the methodology. It was great that we did go through that expiration last Wednesday. And the customer interest is strong. We're continuing to work with people to understand the product and build that ecosystem. And we'll continue to work on it from here. And as we head into things like the election or Q4, or we're in the middle of Nasdaq earnings kind of right now, people are understanding and starting to look at how they could use something like VOLQ in their strategies as a hedging tool, as a market access tool, or a trading opportunity tool. So it's really been great to see and a lot of fun, and very interested to see how it goes from here and how it continues to grow.
All right, Tim, great stuff as always. Thanks for joining us on Trade Talks.
My pleasure. Good seeing you, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.